So you want to get pre-approved for a purchase mortgage, and there's low inventory, and you may have to offer more than the listing price of the house, and you're going to be going up against anywhere from 3, 4, 5 to upwards of 20, 30, or 40 other people who want the same house. So how do you win that offer? How do you do that? All right, and that can be very intimidating. In fact, intimidating so much so that it might deter you from even looking for a property, or you might get what's called buyer fatigue after writing offer after offer after offer and not getting it accepted. Well, look, it all starts with the pre-approval process, okay? Now, when it comes to pre-approval, there's a lot of confusion in the mortgage industry, all right? There's two terms that are thrown around, and I hear about this all the time. One is called pre-qualification, and one is called pre-approval. And they are used interchangeably, and believe it or not, depending on who you speak to, they're going to have a different definition for it. I look at a pre-qualification as simply a conversation that you might have with a loan officer or a lender. All right, they might ask you a few questions, you're going to give them a few answers, and they're going to say based off of that, it sounds like you're pre-qualified. Right? You can throw that out the door. You don't want that. That is going to set you up for a lot of problems. Okay? You want what's called a pre-approval. To me, a pre-approval is when your lender or loan officer is actually talking to you, having an intelligent conversation with you, gathering information, much like a detective does on a crime scene. Gathering information, looking at your income, calculating it down to the penny, looking at your assets, looking at your credit, looking at your housing ratios, which are financial planning numbers that we look at just to gauge affordability so we can give you good advice. And then at the end, we're going to run all of that through what's called an automated underwriting system, which every lender and bank has. Whether they choose to use that in pre-approval phase or not is another story. But you want to make sure that your loan is run through an automated underwriting system, and that receives either an approve eligible or an accept. And if we do all of that, we do that right, then that's going to alleviate a lot of problems. Now, a pre-approval is not a loan approval, all right? That is not an underwritten loan, all right? But if pre-approval is done properly, all right, more often than not, you're going to have a good loan that'll make its way through underwriting. Now, the underwriting process is where your loan is actually submitted and looked at by an underwriter who actually will go through everything, all the documentation, and render a decision of either an approval or a denial. And the stronger your pre-approval is, the better chance that you have to get what's called an official loan approval. Okay. Now, sometimes in pre-approval, if the situation is really complicated, we actually can run that through underwriting in a pre-approval phase anyway, which is never a bad idea on complicated loans. So if your income has characteristics that are, worthy of having an underwriter look at it, that is also something that you might want to get done in pre-approval. If you're working with the right loan officer or the right lender, they're going to know when to do that, and they're going to want to take care of that and make sure that you have a good loan. In other words, we're not just taking applications, throwing them up against the wall to see if they stick, hope that they work, and worry about any problems later. No. That is the absolute wrong way to approach it. All right, you want to work with somebody who's like an advisor and has got your best interests at heart, and so you want a really thorough pre-approval. Okay, now pre-approval, unfortunately, is only half the battle in this market. All right, let me repeat that. Pre-approval in this market is only half the battle. And what do I mean by that? That means if I'm talking to you and we do all of the steps that I just mentioned prior, and I say to you, hey, you are now pre-approved for a mortgage, you can go look for a house, let me know when you find one, and we'll run some numbers for you and we'll get you a pre-approval letter. That's only half the battle. Okay, if you stop there in this market, you're going to be setting yourself up for disappointment. Now, why do I say that? Because you need a strategy for your pre-approval. All right, the second half of a pre-approval, all right, should always be backed by strategy. Now, what do I mean by that? So let's just use some pretend made-up numbers here so that I can illustrate my point. So let's pretend that I pre-approved you for a $250,000 home. All right, and we'll keep it simple. You want to put 20% down. And I say to you, hey, at the end of the day, looks good. Go find that $250,000 home. Looks like you're set. We know your numbers. And, go find it. All right? Well, as I said before, if we do that, we're kind of setting you up for failure here or disappointment, because oftentimes in this market, that $250,000 home that you go out and see is going to have many offers on it. And so that means you may be in a situation where you have to offer more than $250,000. In fact, you may have to offer $300,000 to win that offer. Now on the surface, that might freak you out, right? That might scare you. You may get advice like from other people, family and friends and coworkers saying, never offer over the asking price. You want to offer under the asking price and negotiate. Whatnot. Those days are over for now. Okay, you might be in a position that you have to offer over asking price. So, if you and I are talking and we have that $250,000 pre-approval set up, the next thing we're gonna do is let's look at it at $300,000. All right, let's see what that looks like at $300,000 with 20% down. All right, it might not be as bad as you think, and you might actually realize, well, you know what? I can do that. I don't need a lot more money. And the monthly payment isn't as high, it's not going to go up as much as I thought. I can definitely handle a loan like this. And so, okay, well, that's step one. But what happens if the house doesn't appraise? Okay, which we see a lot. What happens if there's a $250,000 home and you decide to offer $300,000 to be competitive and the property only comes in at $290,000? Well, what happens there? Obviously you might not want to lose this house. It might be the perfect house for you. If you have the money, you obviously can bring that $10,000 to settlement. Or we can get strategic and use your loan product to help you out here. So instead of putting 20% down now, maybe we have to increase the loan amount by $10,000. Oh my God, oh no. You say, I can't do that. Jeff, I can't have PMI. I can't have private mortgage insurance. I was told never, ever do that. It's really, really, really bad. You know what? Maybe it was bad. It used to be bad. But it's not as bad as you might think now. Why is that? Well, for starters, there are many more mortgage insurance companies out there now that offer private mortgage insurance. So what happens in any industry when there's competition? Prices come down. So mortgage insurance isn't as much as it used to be. And not only that, but it's also risk-based now. So in other words, no two people may get the same policy, the same quote. Right? If you have a real strong loan, you might get a really favorable rate on PMI. So don't discount it, all right? Don't discount it because somebody else told you it was bad or a waste of money, all right? There is strategy behind it and it might make sense, especially to get your dream home. All right, and PMI may not be on your loan forever. All right, there are lots of ways to remove PMI at some point down the road. But if you're just going to use private mortgage insurance to not do something or not get the home of your dreams, you could be missing out. Okay, so we can use strategies with your loan to help in situations that could come up in the offer process when you have to go over ask in a tight market like this. Okay, now, when would you want to know all of this? All right, would you want to know all of this at pre-approval? All right, or would you want to wait until you find a home, fall in love with it, speak with your realtor, who then tells you there's multiple offers on it, and you're now nervous because your realtor told you need to offer probably more than the asking price? And I've seen it a million times. And you know what happens? People come back in that situation and say, yeah, I'm going to offer $5,000 more. All right, look, I get it. You don't want to offer a lot more than that, but be realistic. Do you really think $5,000 more is really going to be enough to help your offer rise to the top? Maybe. All right, things happen. Depends on the market and how things are priced, but probably not. All right, if you really like this house and you want to make a strong offer, we're going to have to look at how much over ask we think we need to go to get the property, and does it make sense? All right, we want to look at what's called a bid over ask calculator. All right, we want to look at and analyze, hey, if I'm going to go over 10,000, 20,000, 30, or even 40, is that a good deal for me? When will I recoup that? Okay, those are things you want to know so that you're not going in blind. All right, believe it or not, with appreciation, it might not take you as long as you think to recoup that value that you're going in over ask. And it would still be a good investment for you. Okay? Those are the questions you want to have answered before you find a house and before you make an offer. So the first step in the pre-approval process is getting pre-approved and making sure it's a valid pre-approval. Okay? The second step is you want to wrap that around with strategy. All right? And then the third step is you want to make sure that you, your lender, and your realtor are all on the same page. I call that a triangle. All right? A triangle is really strong. It has 3 sides, and you want no kinks in it. All right? If your realtor and you, and then you have the base at the bottom of your lender, are all on the same page, and everybody knows the strategy we want to do, and we can answer the what ifs. When you go to find a home, it won't be a fire drill. All right, you're now gonna know exactly what we could possibly be up against. Okay, that is how you get pre-approved the right way in this market. I hope this helps. If you have any questions or comments, please post them below, and I look forward to hearing from you. Thanks.